Sup traders, welcome to Failure to Displace, and in this video we're going to do something a little bit different. Today I recorded my New York session live, so we're going to play back through the session and I will walk you through the analysis that led to me taking this short trade that bagged a 2.4R. Let's jump into the live price action now and see the analysis. What's up guys? So I'm looking to maybe execute on a live trade here. I'm just going to walk through what's happened price wise and talk you through my thoughts on this. You can see currently in live price we've taken the session low from London. So London has come in, it's swept New York PM session low. We put in relative equal lows with this 15-minute time swing low here on this candle. Coming into the session, we've broken this low. So this was essentially a gap time low, which we pulled back. So we can see that was a swing low. Relative equal lows here. We pulled up, but then we've come down and we've broken this low. As we've broken the low, we're pulling back. I'm going to just delete this. We've had a break of structure with displacement. But this displacement is outside the swing low of this range, so we're not back inside the London range yet. We are still outside. I'm monitoring the 50% of this fair value gap. I want to see if this holds, and if we can start getting displacement back inside the range, then there's a potential long opportunity to take us back into some of this price action here. Specifically, we've got the swing high here, which is our gap time high currently between the two sessions. Might go as buy side liquidity. So we've taken sell side from the London, taken the Asia low, we have displaced below, we put in a low which is the end of the London session as New York opens. We've swept that low. This is one of those areas where you could get sucked into taking a trade because you did have a break of structure, but we're just coming into the new hour, so this is where patience pays. From previous videos you'll understand that as the new hours open up, they can generally have an influx of volume, so we're looking to see if this volume is going to break us up back into this range where we can potentially target some buy side liquidity, or if it's going to drive us down. We do have a new week opening gap down here, and a lot of imbalance as well. So we're just tapping the top of this 15-minute order block, so could potentially get a reversal here. We've got a fair value gap into the new week opening gap down here, so we could come even further down into the new week opening gap at the start of this new hour. Let's just check our premium to discount from the swing highs to swing low to the swing high. So again, we're just into the 50% of the range. Not quite an optimal trade entry, which would be this order block here. This is an area where we have come into a discount, and potentially if we start pulling back into this London range, we could see a reversal. So the new hour is just opening up now. Our fair value gap with balanced price range. So again, another signature that we look for in price. Aggressive move down, aggressive move back up. We'll have the bearish fair value gap followed by a bullish fair value gap. Where the two overlap is our balanced price range. And now we're just being patient. So this did sweep and break liquidity, so there was a potential that you could have got long there if you were really aggressive. For me, I'm wanting some extra confirmation here, and I'm wanting to see us pull back into this range here and have an official failure to displace below the London low. If we start breaking down here, then we could potentially be looking to follow the trend to at least hit the new week opening gap. So this could be a continuation trade down to the lows. If we pull back into the range, it could be a reversal trade, 2022 mentorship style, into this liquidity up here. So we're at, the new candle has just opened up, the new hourly candle has just opened up. We're going to see if it gives us any direction. Obviously New York Stock Exchange hour opens at 9:30, which again can be a rather large injection of volume, news, no news that we need to be worried about today, so there's nothing happening this afternoon that should cause any major issues. At the moment we've just got consolidation, so really what we're looking for is we are looking for a strong break above this high with displacement. Let's mark that as a break of structure, sorry. We have broken this high already, so we have got a break of structure, we have got displacement, but we're not inside the range. So we're waiting for a pullback into the range with displacement before I start taking any long positions. At the moment we've broken below the 50% of the fair value gap, which is not a particularly good sign. We're expecting the 50% to come down, so we could just sweep this and come down for that new week opening gap here. We're going to need some kind of confirmation to take a long position. As this stands, it looks quite bearish to me, if I'm honest. We've swept out, we've probably got new week opening gap to come down to, and then we've probably got the New York session low here, our green line, which is an untapped session low, so I think we could maybe be retracing back through all of Friday's NFP price action, or Monday's price action, should I say, taking out Monday's low. Obviously London put in the high of the week, or low of the week is traditionally put in on a Tuesday more than likely, so this is the high of the week at the moment, so that could give us extra confluence that we are more likely to be seeking lower liquidity now to put a low of the week in. So going for the opposite side of the range, which at the moment would be Monday's low. So Monday's put the low of the week in, Tuesday's put the high of the week in, displacing away, aiming for the low of the week. So we need to keep an eye on the session high. Could grind our way back up there and drop. We can keep an eye on optimal trade entry of the session. Obviously no fair value gap at the moment. Swept this liquidity, start breaking back into that range, and I've been more tempted to be looking for shorts because we've had a liquidity sweep and a liquidity sweep into optimal trade entry, which was at this area, and we're pulling back into the range now of that liquidity sweep. This is our swing low for the break of structure for a short, so if you break that with displacement, we've not broken this with displacement, so we can get rid of that. In fact, we can keep that, but we can change this to a failure to displace level for a short. We close back in that range, leaving fair value gaps in this area. That's a short trade. So this is our new swing low because this is a fractal swing low. If you don't know what fractal swing lows are, there's a guy called Garland Trader who explains this. But basically, this is an inside candle. It failed to break the high of this one, and then this one broke the high, so it preceded. So because this failed, it creates a fractal swing low here. So on a lower time frame, you would see that as a swing low. So this can be our break of structure now. We can break that with displacement. So this is quite a good looking candle. If it can close really strong bearish like this, then you would class that as a displacement candle, breaking over our break of structure that we highlighted. This trade, if you did take long in here, would have been potentially profitable. You would definitely be at break even by now. We need this to continue just to leave us a big fair value gap over this break of structure. This is the reality of trading and being patient, because again, not so long ago I would be looking to take this as a short. But again, for me, this is not high probability. We've not got proper displacement over this breaker structure. Basically a liquidity sweep, we've swept it, and then we're coming straight back in the range, leaving fair value gaps. So it's not the kind of price action that fills you with confidence. Seems risky taking shorts in here when we're so close to the session high. So it would be more comfortable to have this liquidity taken for a reversal. So our new break of structure is this candle here. This is the swing low that was created before we ran the high. So going back to this, that displacement candle has paid off quite nicely. Anybody who took that long there, well done. That was a very good trade. The only thing stopping me, as I say, was that it was created outside of this range. I want to see displacement back inside that range ideally for a high probability trade, because the displacement was outside. Meh. We've engineered a bit of equal liquidity here, equal highs and buy side just before the session opens. So a pull back and then a sweep of those highs might be in order. Again, keeping our eye on this break of structure at the moment. This potentially is going to be a new break of structure if it doesn't take that high out. So it hasn't, so we've got a break of structure here now. If this takes the high. So this is the 9:30 open, New York SE open. Do with this closing above this candle, so we do have a swing high, swing low, sorry, if it can close up here. So we've taken this buy side. We are going to be looking now for a failure to displace above this buy side. So pull back in this range to break structure with displacement, and that would give us our 2022 short trade. Alternatively, price could now be displacing above this high, which means that we are going to be seeking buy side higher in the gap time. %, of that range. So 50% of that range, there's some confluence. 50% of that range is 50% by the looks of it. of our 15-minute fair value gap. So if that 50% of that fair value gap is respected, there's some confluence for you. And then I pull back into the range. This is a swing low here now, but it's outside of our session range. So although we could get displacement, we need it to be closing inside this range to be taking a short position. We're into a 15-minute fair value gap now, and we have swept session high liquidity. So pull back into this range with displacement would be a valid short trade in my opinion. Broken structure. We need some closures back in the range. That's not what we want. We don't want to be sweeping this and then closing back in again. We want to see some displacement through this fair value gap now, signifying we are coming short. We've closed over that structure, so we have got a candle closure there. We need this to continue through now. Yeah, that's nice. Strong reaction. We're going to break this structure here. So we've broken that structure with potential other break of structure internal of the range. So I would take this at the moment. I would be looking to short from the extreme fair value gap with a stop loss above that high. It's only a 2.5 pip stop, which will be a 2.5 pip 50% off, so 1-to-1 risk free. We've swept liquidity into a 15-minute fair value gap, breaking structure back inside the range. So that's enough for me. We do have a balanced price range here. So the entry, if this stays, could be slightly better entry coming off this balanced price range, which would be from this candle low to this candle high to this candle low here. So that could be the short trade there, which would give us a stop loss above the high, 4.2 or so. Yeah, 4.2 pip stop loss. Just going to input that. And then looking for a 4.2 take profit 1. So this now could be our breaker block if we start displacing below this. This is our last down closed candle before we took the highs. Close through that, this is our breaker block. At the moment it's an order block. If we lose that, that would act as a breaker block. This is the point where you need to have faith in your system and faith in your analysis. Not going to win them all, so it may not go right. So that's tagged us in aggressively. Let's see if our analysis was correct. Is this optimal trade entry, fair value gap going to hold? Or are we just going to get round straight through? So we're going to break even at 1-to-1. Not break even, I'll be going risk free at 1-to-1. So I just need to get that up on my MetaTrader. So I'll be taking 3 contracts off when we get to 1-to-1. So I am in the trade on MetaTrader. I'm going to stick it on my other screen so I can close out. So there was a reaction from optimal trade entry. We want to keep it going now. The issue I have is that I am in 5 minutes before the new hour starts. I'd like to get risk-free before the new hour opens if possible. So this is the new hour opening 3 o'clock candle. So this is the make or break. Which direction are they going to push it at the open of this new hour? And nearly there on MetaTrader. Come on, couple more. One last push. I'm going to close half there. Balls to it. Hate it hovering around over my thing. I'm going to put my stop loss at, let me see. We've taken it, so we are officially at 1-to-1 anyway. I did close a tiny bit early. So let me just check what I actually closed out. Yep, so I can afford to have a stop loss at 41. So let's reset this. We are in business. I did take profits slightly early. Our entry was there, so we can get rid of this one. So my new stop loss is at 41, 4.1 pips, which is just above that fair value gap. Obviously, I've taken 50% of the trade off, so I'm risk-free. We're targeting wherever you want to target, if I'm honest with you. Potentially 2.8R, which is probably where I will go for. You could let this run until the liquidity down here, which would be 10.9. A bit stressful getting to risk-free there. I didn't like the way it was hovering over it, but at least we're into a risk-free trade now. Nicely up, almost 8 or 9 pips in profit. Should hopefully run this low quite aggressively. That's the trade. So the entrance was based on a failure to displace above the session high. So that was the existing New York high. We swept it into a higher time frame 15-minute fair value gap. We respected the 50% of the 15-minute fair value gap. We broke structure down here on this leg and this leg. So 2 breaks of structure with displacement back into the range. So that is the key takeaway, in my opinion. It's the displacement back into the range that made the difference. I am going to close out in full at the session low because I just want to get off the screen now after sitting at all of that. So that'd be 2.8R, which is just about to hit. So I'll close out in full as we sweep that high. Potentially price could run to the new week opening gap or indeed the session low from Monday. The reason I'm closing out is because I do need to leave any moment now to go and pick the kids up, and I don't like to be in trades while I'm away. In fact, I think I'm going to close out as soon as it takes that. Okay, I'm closing out in full here, guys. That would be the target, but I am taking my profits at this point. Broken that. That's our old fair value gap that we were eyeing up, which hopefully will act as resistance now as an inversion fair value gap. I am closing out in full because I need to leave. We have taken liquidity here, we've taken some liquidity here, so see if this inversion, see if it actually does work as an inversion fair value gap or not. I'll leave that running, see how it plays out, but I'm happy with that. Bagged myself a good trade there, and patience paid off not jumping into the long. We got in for a quick action down to the low. So I've got back from picking the kids up. We can see that that actually reversed in full and would have stopped us out. Well, you would imagine your stop loss would have been at break even. So almost seems as if I knew what I was doing when I closed out early there, because that was a full reversal. It wasn't. I would have expected the session low to be taken. However, these things happen, so it was a good call to close out early. I hope you found that useful. That was live trade analysis as the New York session was developing, and my thought process into how I would take a trade and deal with the various situations that pop up. If you enjoyed the video, please leave a like. If you have any questions, please leave them in the comments section down below. And if you're enjoying the content, please consider subscribing for more videos like this one in the future. Thanks for watching, and I'll see you again real soon.